Yeah, hello and welcome to another update video about ICP. So we're not yet in a new exciting uptrend. The corrective price action seems to continue there. Looks a little bit exhausted to me at the moment, at least. Yeah. You see the structure has completely changed from what it was when the market started to move up here. And it then started, okay, it got a little bit of a dip, then made one final push. Looking at the 4-hour chart, you see already there were bearish divergences, which then led to another decline. I think at the time the market then got oversold even here on the 4-hour time frame. But yeah, so far nothing really too bullish yet. The MACD, as you can see, if we just look at the momentum indicators here, first of all, the RSI in the bearish range again, below 50. So from an indicator point of view, I don't see anything super bullish yet. Also, we're just pulling back to a trend line. That can be interesting. I mean, it's in the bearish range, but if that breaks that trend line, that would be an additional bearish signal. Sometimes trend lines on the indicators can be a little bit more helpful than trend lines on the price charts. So I would pay attention to that. I'm currently on the 4-hour chart. The MACD, though, also shows further downside, possible bearish cross here underway. Looking at the daily, which is a little bit more meaningful, here you can see that, yep, we crossed bullish, but it's already reducing bullish momentum. It's not clearly going up. That's the MACD. But if you look at the 4-hour chart, which is obviously a little bit faster, compared to the daily, if the 4-hour is down, then that will soon be seen on the daily as well, or it should be at least. Looking at the RSI, yeah, we are we are about to get a bearish crossover here as well. So break below that moving average here, the yellow one. But we'll see. I mean, I can only tell you there is no clearly bullish signal. It's fairly neutral. The daily is fairly neutral, but the 4-hour looks potentially bearish, on both MACD and RSI. Essentially, these are two very similar indicators. From an Elliott wave point of view, price action point of view, this to me looks like a corrective rally. Looks like a corrective rally. It could even turn into, that's obviously speculative at the moment, but it could even turn into an ascending wedge pattern. These tend to break to the downside. So what do we have here? We have a potential wedge. Again, I don't have enough touch points there, even though maybe with this, yeah, okay, I think I might have enough touch points there for an ascending wedge. That is not a bullish pattern. In one of the last videos, I highlighted to you that this might be an ABC structure, and the C wave was sort of, expected to go a little higher, which it did. It moved above the A wave high. It's just corrective price action. I could show you so many wave counts, so I try to keep it simple, right? Because whenever we are dealing with corrective and overlapping price action, which is not clearly bullish, you are left with a lot of options. I mean, one example, for example. So if it breaks down now, then it's definitely possible a top is in. I mean, absolutely, it's not clearly bullish. The warning, which I also highlighted a few days ago, this here is only a 3-wave rally. You see that? Can you see that? This is A, B, C. So it's 3 waves up. I do not trust that. So that's one issue. So I labeled that as an A wave. B wave pullback looks also more like 3 waves. Makes sense. And then the C wave up would be very short. Yeah. So of course the C wave could extend further. But the condition for that would be that we're holding above the $11.25 level. So from an Elliott wave point of view, I mean, it might be that the B wave is unfolding and C in wave B is unfolding, and we get a 5-wave move in wave C. 1, 2, 3, 4, 5. And then, I mean, you can trade that if you like to, it just has to stay above that last swing low, because that's the invalidation point. So you have a clear level there for your stop if you want to use it like that. It is, however, possible as well that obviously the top is already in. In that case, the C wave would be a bit short, but it's possible that wave B unfolded as a flat structure like this: A wave down, B wave, C wave, and then it works with the length between waves A and C. it looks very similar. Often the C wave has the same length as the A wave or similar. This was still a little bit shorter, but it's close enough. So yeah, I'm watching that, but it could also just grind its way through this ascending wedge, yeah, until it gets exhausted and then it breaks down. It's certainly nothing clearly bullish yet. So I have no clearly bullish pattern. I mean, if you definitely desperately want to trade this on the long side, I mean, I just gave you a level, an invalidation point, right? Below the last low there, basically. What if we break down here from the trend line? Well, then I think the next test would be $11.17. So this is basically the previous low. So that level will be tested. What could happen then is that this forms a head and shoulders and then eventually comes down like that, for example. Yeah. So yeah, I mean, what can I say? We are ranging. We're in a range at the moment, but the range is not even very well defined. It's potentially that C wave, which is still possible to unfold and still expected to unfold, that could go down quite a bit, possibly to $8.32 or even $6.77. I think this is a chart where I'd like to see more price action. We need more clarity, corrective prices. I mean, they can always be traded, right? But then ideally you use additional indicators, additional, I don't know, moving averages for trading then, because there is no clear Elliott wave setup on this time frame. And overlapping price action is always, especially moving in an ascending wedge, that's always a bit of a warning that things are getting exhausted here. Yeah. So if it grinds higher, next resistance will be at $14.25. And then here, this is the ideal target range actually for this C wave. And I see it as very weak, and I think there's a good chance to get back into the yellow box. But until we break below that last low, the trend is up. We're making higher highs, higher lows. So it's it's a reasonable assumption for it to watch to get to expect it to go into that target area. It's between 15.25 and 18.49. So I'll focus on that until it breaks basically. But don't expect that this is something clearly bullish at this stage. It's not. Of course, it can rally. Everything can rally, but it's rather unclear. Next, but yeah, what did I say? Next resistance is around $14 and 20.25. Okay, that's my update about ICP. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.